And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. Trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Holy Thursday, the 14th of April. Thanks for trusting me with your time. Happy Holy Thursday and happy Easter weekend to all of you who celebrate. As always, we're going to attempt to look for accurate context thinking about risk management and patience today in these markets. April 14th. Hope you've got your taxes all ready and all set. Happy Holy Thursday again. Happy Good Friday. Today is, by all intents and purposes, Synthetic Friday. Markets are closed tomorrow. We're not going to have a forecast. Taking the day off tomorrow to get rested up and be ready for next week and enjoy the Easter weekend. This morning, economic numbers. A lot of them due out today. First thing, the ECB decided to leave rates alone. Didn't change their interest rates at all. Jobless claims this morning, the initial jobless claims last week came out at 166,000. They were looking for 171,000. Came out a little bit higher than that at 185,000 this morning, continuing. Last week's number was 1,523,000. They were looking for 1,500,000. They came out a little bit lower than that, 1,475,000, whatever all of that means. Retail sales came out somewhat mixed. Import-export came out higher. We're still waiting for business inventories and Michigan consumer sentiment, and of course 9:30 the nat gas numbers due out, and that's going to wind up our week in economic numbers, at least the ones we're able to participate in. Apparently, some big news this morning. Elon Musk has offered to buy Twitter at 54.20 a share. That's $41 billion. He's offered to pay it in cash. Let the storm begin. This is going to be interesting. Stocks ready to open steady to lower now. They were a little bit higher earlier, but nothing all that tremendous. We do have Make Hogue Money today. Here is the link so you can join us if you like. There it is. It's right about 8:20, right when we're done with the forecast. We're going to meet in a Zoom room. We're going to talk about trades in the EM and the S&Ps, and we're going to see if we can't find an opportunity to make me some money. It's all on you guys. All right. Stocks earnings season really kind of began yesterday. A little acceleration of that today in the banking sector. United Health beating on both. Wells Fargo missing on revenue. Morgan Stanley, Goldman Sachs, Citigroup, U.S. Bancorp all beating on both. And the PNC Financial missed on revenues just a little bit. Crude prices higher after a surprise 9.3 million barrel boost in crude stocks yesterday. The reason we're a little bit higher is gasoline inventories were down 3.6 million barrels. As always, hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here in the forecast. And make sure you subscribe to our YouTube channel so you can get notified when we do go live. You notice I'm wearing my hat today. We started a trend yesterday afternoon. Dan and MP were both wearing hats, so I figured I'd follow suit today. I was having a bad hair day anyway, so, well, I think I pretty much have a bad hair day every day. Problem with it is, it's leaving. But hey, that's all right. I'm all right with that. Looking at the VIX, the dollar index, and the 10-year yield this morning, VIX down about 1%, 21.59. The dollar index down slightly at 99.85, and the yield on the 10-year off a little bit here at 2.7% this morning. So, what are we looking at? Oh, hey, got to say good morning to everyone. Kirill, first in the room, you win the prize. Brian Shaw, good morning. Terry King, Theo, good morning. Bill, in the front row, you're sitting next to Bob Euchre apparently this morning. Scott Saw and he conquered. Tachyon, chilling with Dylan. Fred Decker, yes, bringing out his Bob Euchre this morning as well. Manuel, good morning. Vince, happy Holy Thursday to you, my friend. Marcelo, Frederico, Giacomo, good morning. Brody, yo. Devant, Nico, good morning. Bill, good morning to you. Expediter Dean, Tachyon, 1.5 done for the day. You are just killing it in that overnight, Tachyon. I want you to send me that strategy. I doubt you would, but I can always try. Expediter Dean, happy Easter to you too. Sarah, good morning, everyone. Prayers and love to you as well, Sarah. Scott Saw, rocking the hat. All right. Feels like Friday to me. Feel exhausted after all of today's trades. Well, it is Synthetic Friday today. So you're done for the day. You're done for the week. Bill Phillips, hat backwards. Yeah, you got to have the hat backwards. Apparently that's the new trend. Glitter Sandwich, good morning. Happy sort of Friday. Yes, Laura, good morning. Jordy, Fred Decker. Do I need to wear my hat? No, you don't have to wear a hat. You come in your jammies if you want, Fred. Juan, good morning. Isaac, GT, blessings to you. Lincoln Hawk right. He'd sit down to do his arm wrestling and he would always turn his hat backwards. I always thought that was a decent movie. I don't think it got all that much good press, but it was a good movie. Switch between the 500,000, 2,000, 4,000 ticks. I trade on the 1,000 tick trade this morning. Baldness is the best cure for bad hair days. Yes, yes, it is. I've shaved it off at certain periods in my life, and turning on his trading powers. That's right. Hey, Jake Crockett, good to see you. Jason Cook, good morning. Happy backwards hair Thursday. Hat Thursday. Yep, good. Finally here on Thursday. Good to see you, Nicholas, Stephen C, James, Tachyon. Already in the make whole money, just test and practice. Most of it to understand in MACD and SSO. I think that's the slow stochastic relation to the market price, and find best tick range for you. Practice and practice. Got it. All right. So we're gonna go through these charts. We're gonna kind of rip through them a little bit here because it is Thursday. It is make whole money, and I don't see that there's a lot of change. That there's a lot of opportunity here this morning, except in certain situations, and we are, of course, still succumbing to economic numbers that are still due out, business inventories and Michigan sentiment. And don't forget, we are still in a very uncertain period of time in the world, and headline risks are always out there. Make sure, as I try and remind everybody, make sure you use stops to protect yourself. Always wear a stop. Protect yourself. All right, let's jump into the charts here. We'll start with the E-mini S&Ps. Let me get all set up here, and we'll get into it. All right. Here's the daily in the S&Ps. Open interest continues to build over the last few sessions, kind of centering around this 44.10 level. Much more opportunity at weekly kickoff low in the Nasdaq. We're going to see that shortly here, but we're still kind of building 44.10 weekly kickoff level, still in the neighborhood. It's the last trading day of the week, looking largely in balance and central in this week's range. The low of this week's range 43.75.50 on Tuesday. Monday's high for the extended trading hour session, 44.91 quarter, and here we are kind of right in the middle. This purple line here is last week's low. Economic data and headline risk, okay, we're well aware that those remain, and we're very centrally located, basically in balance, in range for the week. Here's the 30-minute chart. Do we have any overnight inventory with which to look for opportunities from? I'm going with no. If there is, it's probably a little bit to the short side right now. Let's see here. Here's 5 o'clock. The open. I mean, price is a little bit lower. I'm not looking at a large amount of overnight inventory with which to take advantage of an early opportunity. We're opening in range, in value. Yesterday, we were discussing earlier in the session when the market was trading up here. When I sat down to start doing my research, I was pretty confident we were going to fall into a repair day. We had a double distribution trend day the day before. When we open in between the distributions, we tend to trade to a point of control, a visual point of control in both distributions. In other words, trading to this lower distribution of time and volume and this upper distribution of time and volume. Now, we didn't open in that area, but when we did open, we looked a little bit lower and we drove right into the area of repair in question. So we did trade to a point of control, an assumed point of control in this lower distribution. When we got into this low volume area and started driving through it, the goal was really to reach a visual point of control, an assumed point of control in the upper distribution, which we, by the end of the session, actually did that whole thing. We made that whole move. So we've looked to see if there's any more business to do here. We're still in that area. We're in range. We're in value. We don't have any overnight inventory, no runs, no hits, no errors, nobody left on base. Be patient this morning. Be patient. Most of our major economic news is out. The earnings are out. And we're, again, very centrally located inside the range for the week. Now, here's that Monday high. Here's the Wednesday low. Here we are basically right in the middle. So try and stay somewhat patient. Let's take a look at crude oil. Maybe we can catch that opening range. We're going to be trading June on Monday. We are in the teeth of rollovers. So that kind of makes me believe that we're going to be pretty short time frame controlled unless there is some sort of news event that changes that. We lost 5,800 in open interest, but again, it's really blurry to use that for directional activity or an understanding of inventory because the market is in the middle of rollover. Tomorrow is switch day. If we were going to be open Monday, I'm confident at least that the volume will be greater in the June contract. So the weekly kickoff levels that you get on Sunday will be in the June contract, and we'll start looking at June on Monday. Because of the situation, because of where we are, because of the lack of ability to see volume and open interest in a pure fashion in the front month here, or even in the overall open interest, because of the rollover, I'm a little bit hands off on crude oil today. Okay, I'm not really looking for anything, especially, well, maybe early, but maybe not. We've got overnight inventory to the short side, but here we are. We're right in the middle of value from yesterday. What is this market attempting to do in the longer time frame? Well, we had a breakout to the downside of our this isn't correct here. We had a breakout to the downside of our coiling here. we have not been able to break out down below weekly kickoff low. This is Monday's low, which was 92.93. Weekly kickoff low is 94. So we got a buck below it, but we rejected. Now we've got the market kind of coming back and retesting this trend line, perhaps another test of this trend line. We've got a convergence of the trend lines here, which would probably be tomorrow if we were going to be trading tomorrow. Maybe there is an opportunity here, but going back to the 30-minute chart, we're in range, we're in value. We have some overnight inventory to the short side. The short time frame is to the upside. It's been one time framing higher for a couple of days. But again, in rollover, I've got to really try and be careful, okay? 106.40 is weekly kickoff high. I don't see us getting to that today. I don't see us really doing all that much. So I'm going to try and stay very patient as long as we're in value. In the middle, excuse me, in the middle of value at that. Here's the opening range. Okay, we've got 8, 9, 17 tick opening range so far here. Even the opening range looks boring. We did take a look down below it if we were going to stop in with that. We're currently short with about 20, 22 ticks of risk. But we're in the middle of value. In the middle of value, I'm going to let this market establish an early range and then work the extremes of that range if I'm going to trade it at all. I probably will not because of the reasons mentioned and the fact that it is in rollover. Let's take a look at the Nasdaq now. All right, the Nasdaq has been much more fruitful as far as the weekly kickoff low is concerned. It's accepted down below. It tested it on Tuesday, Wednesday, tested it last night. Let me get my notes out here. We added 2,800 in open interest on a little bit lower volume, but we're still showing some resistance here at that weekly kickoff low, which is 14,264. Much more visual on the 30-minute chart. We're just going to finish talking about this though. The open interest on lower volume, it's a tough read here. This weekly kickoff level is going to be somewhat pivotal for us today. Here's the 30-minute chart. Resistance, Tuesday. Resistance, Wednesday. Magnetic, repulsive, magnetic. The peak above it on the overnight inventory. No, not really. Are we going to accept value from yesterday? We do have a bit of a double distribution here. We've got some single TPOs down here. If we get into that area, then we may fall into repair again. Yesterday, we did the same thing in the Nasdaq as the S&Ps. We opened near an assumed point of control from the area down here. We drove through the low volume area to and beyond an assumed point of control from the upper distribution yesterday, actually right almost precisely to weekly kickoff high. What was that high? 14,266.50. So about 10 ticks through before finding some resistance. So do we still see resistance there? At least it gives us the opportunity to limit our risk if we have an opportunity at that weekly kickoff high in the Nasdaq. Might be getting a little bit tired. It's been checked a few times. If we exhaust the sellers up here, the shorts down here may find a way to run. All right. Let's take a look at gold. So 5 straight days of one-time framing to the upside. 1, 2, 3, 4, 5. Volume has begun to fall off on this upside move. We added another 1,600 estimated open interest yesterday. I find myself asking, what direction is this market attempting to go? What direction? Where is it trying to go? It's trying to go higher. How good of a job is it moving in that direction is now the question, and now in question. So far today, we've got an inside extended trading hour range inside of yesterday. the whole moving averages. This is the 9 session. This is the 13 session whole moving average. Largely holding above price, especially when it comes to the 13 session moving average on the daily chart here. That seems to be somewhat in question. This can be an indication of a loss of momentum, if you will. Take a look at the 30-minute chart. So I'm just going to bunch this together and we can see what we're kind of talking about here. So, hello. There we go. So it's been relatively organized on the way up. We have left a naked point of control here, which is a visual, but overall we've checked all the points of control all the way up. The question is, does it seem as though the ranges, we got value moving higher, we've got it overlapping to high, we've got an outright higher here, we have an outright higher here, but the ranges are getting smaller, and it seems as though that the market is struggling to continue this push to the downside. So, I'm not suggesting that this move to the upside is over. It's going to take some new business. It's going to take a new impetus, I think, to really try and push this market higher. And we may have that impetus already. We don't really know. The market opened. It pushed to the downside. It left the opening range to the high of the session. Not quite sure if that still remains. However, the market seems to be trying to get back into value after rejecting it. The initial balance is, I think, 81.70 or something like that was the opening range high. So our initial balance is about the same size as the range from yesterday. It is a holiday. Do we see a potential for some profit taking, some long liquidation? Are we holding overnight shorts? I think we were holding some overnight shorts. I think we've since reconciled them. Again, patience. I got to try and stay patient today. The last thing I want to do is ruin the weekend by getting banged up today. All right. Here's the euro. We were kind of speculating. We were getting a little bit too short in the hole here. Yesterday, we lost about 1,000 in open interest. So there may have been a degree of short covering, some profit taking in the profile yesterday. The dollar still remains relatively strong. I don't see that there's any reason that we're going to see a major change in direction here. It seems like we're finding an area of balance. We've got this low here. We've got this high here. This is the weekly range, and we're inside of it. So I'm going to be looking for opportunities to trade in balance. If we get to the lower extreme here, it lets me limit risk. If we fail to extend, then maybe we can get a rotation back higher. If we do break out and find some volume down here, I see no reason why this market can't continue to try and push down towards our weekly kickoff low, which is 107.80. Which is 0780, which is up here. That was misplaced. There it is. All right, probably because I sometimes can't see. Here's the 30-minute chart. Okay, repair. A lower distribution and upper distribution. The market opens, drives into the area of repair, drives to a potential point of control in the lower distribution. I'm thinking there may be a little bit more to this downside, but this is a repair move. Similar to yesterday's repair move to the upside. A lot of repair going on yesterday. The 10-year rates have fallen off a little bit. Of course, price continues to grind to the upside here. We've got really, I think, some good profit taking going on off this low. We lost 26,000 in open interest yesterday on lower volume. we're taking buying power away from the marketplace. Are we setting up a bear flag here? Is really my question. The bear flag is a move that is in the opposite direction on lower volume and smaller ranges. If we break out the downside level of the bear flag, we see some possible continuation. Here's the 30. So let's put a little trend line on here off this low. Are we potentially breaking out the downside of this short time frame bull flag? We very well could be. We very well could be. 1, 2, 3 points of contact, another point of contact up here. We accept down below this, we could see a nice reversal from the past couple of days to a downside move here. Might be a nice way to limit our risk as well. And now for the nat gas. So we saw some continuation on the upside yesterday, did we? The upside auction we have been mentioning is remaining relatively healthy. We added another 4,400 in open interest yesterday. Volume remains relatively good. No reason to think that this auction can't continue to keep going, because all of the tea leaves are saying, we still have open interest coming in. We still have decent volume. Boy, this is a heck of a move. This is a synthetic Friday. Would it be a good day to take some profits off the table before a 3-day weekend, you think? Here's the nat gas 30. So overnight inventory, no. We've opened. Did we open with a small gap? Maybe. Are we potentially accepting back in value from yesterday? Quite possibly. Value area special situation play would be a good excuse to take some money off the table if I were long. Just thinking. Take out our overnight low. We'll have to see what happens. All right. All right, so I've got my my sporting hat on. I'm getting ready for the make hog money. Let me see if we got any. We got Siam saying the. Gold and silver are the new crypto. And Miss Natty Gas is ecstatic. Yeah, it is. All right. All right. Do you not consider the S&P 500 to have closed with a late spike yesterday? No, it's more of excess because the it didn't close up there. So 44.40. What was settlement price? 44.42. Looking at it here, so the market actually closed back in the previous range extension. So it didn't close at the high or in the late spike. It actually came back in the range, back in value before it closed. So there's a little bit of degree of rejection there. So I'm viewing that as excess, Fred, instead of looking at it as a late spike. I want that late spike to close at the high, or at least in the late spike. So that is presenting to me as more rejection. Okay? All right. Let's take our deep breath. Let's get ready for Make Hogue Money. I'm looking forward to a nice profit from you guys today. Bring your good trade ideas. Again, we'll have some folks that are available to talk, and we'll discuss trades. We'll vote on trades. We'll take the trades if there are any. It's not looking too fruitful for the S&Ps here this morning, but we'll take a look and we'll see what we can find. So here's that link again. If you are not registered and would like to join, there's the link. Looking forward to seeing you in about 4 minutes. I'm going to try and get it open in the next 4 minutes. We'll be all ready to go. Looking forward to seeing you there. If I don't see you, have a blessed weekend. Be good to yourself. Be good to others. Keep praying for peace. Blessings to everyone. We'll see you shortly.